Good afternoon. We're going to go over the watch list for the week of December 9th. I know that I made a live video yesterday of going through my research and stuff like that, so hopefully that was helpful. And I narrowed down the list a little bit. Yeah, a little bit. But we'll go through them one by one and show you what I see and stuff like that. The first one I have is ROKU. Now, on ROKU, there's really no advantage, really. I mean, I got the hourly on the right and I got the daily on the left. You got the like a wedge right here going down right here and up. So it's wedging on the hourly. I mean, the stochastics is starting to point up. I mean, the last time I had this little right here, it knifed down more, but it is at support right here on the hourly at 144. I mean, it could keep going down to 141. I mean, it could go down to the 138. So there's more downside possibly. So when it breaks this wedge, it's going to make a strong move. It's just not sure which direction. If I had to guess, I mean, I have it on my bullish side of my watch list, which is what I'm going over now. I'm going to go over the bullish side first, but there is possibly more downside, so I mean, I would be careful on this. I mean, 144, if it does go down, you know, look for the 141 and then the 138, and I mean, even possibly the 130, 134 area. I mean, it's quite possible. But if it does break out and go to the upside, I mean, I'd be looking for a resistance of 152. Then if it does get through the 152 area where I had trouble getting through last time, it's going to go for a gap fill, which is 160. So there is really no clear advantage on ROKU. I mean, it's really, you just flip a coin. It's going to go one way or the other. There's no advantage, like I keep saying. So just watch for that when it does break this little wedge pattern right here, it's going to be a strong move in either direction it picks. So that's for ROKU. Now the next one I have is WeDay. Now on WeDay, I mean, you get like an inverted head and shoulders right here on the hourly. I mean, it gets over this, I don't know, 168 range. It could possibly go to the 173. If it gets to 173, there's going to be some resistance in the 175.50 area on the daily. There's actually a lot over here. You can see it. So it will have a hard time getting over that 175.50 area. But, you know, I would not look that far ahead. I mean, if it can get over this, like, let's see what it is on the hourly. Yeah, we get over this 167 area right here. I think that the inverted head and shoulders is going to play out. And if it does, I'd look for a gap fill, you know, probably 171. And then 170, 350 area. I wouldn't, you know, try to go for a home run. I think it's going to go to 180. I mean, just baby steps. I mean, over 167, fill the gap, and that would be a good play right there. So next one we have is BA. Now BA is unless the market, this is going to be really heavily dependent on which way the market goes, but if it gets over this let's say 355, yeah, 355 area, I mean, it could shoot up to 360, 361, so it's got room to go. But if BA drops more bad news or the market ends up selling off, it's not going to be a very good long play. So if it does gap up, we'll possibly watch for continuance over up to 360, you know, 364, right in here. But yeah, 361 area would be the first target if we can get over that. So BA, yeah, we'll see what happens with the market, if there's any bad news or not. But if there's no bad news in the market screen, the BA is probably going to take off and go into the 360, 361 area. So I'd keep an eye on that. Now I also have Disney on my bullish side, even though I just put out a bearish scenario on it. So, I mean, it's going to be very dependent on Disney if it drops news. If it drops news, I mean, it's going to be bullish. assumingly I'm waiting for the day they drop a subscriber update and how many subscriptions they have, and if it's a positive number and the market likes it, I mean, it's gonna pop big. But I do see a stronger case for a bearish side than I do a bullish side. I know I have it on my bullish side of my watch list, but you get it like a head and shoulders right here on the daily. You get a descending wedge right here on the hourly. It all suggests to be a bearish move going down. But I mean, I think that if it gets down below the 144 area, it might be a good buy for a reversal, because technically the head and shoulders will break its neckline right around in here, and that might be a good dip buy to 144. And Disney hasn't been very good for dip buys this past week because it's been very choppy and stuff like that. So I'd be very cautious on Disney. But if news does come out and they do bring up the subscription numbers or anything positive, that it's going to go over 150. Now, I know that the reason Frozen 2 broke all kinds of records and Disney just sold off or was choppier towards the downside. So even though Star Wars is coming out, I would expect it's going to have the same scenario. I mean, I don't think the market's really going to care about Star Wars' numbers. They want subscription numbers, not movie numbers. So that's just my take on it. So, like I said, the downside is possible, but I'd like to see it get up and go towards 150. But either or, you're going to be prepared for either scenario. See how it plays out. But yeah, the chart is suggesting more downside. So if it does go to the downside, like I said, we'll buy the dip. If it's a good size dip, I mean, if it dips down to like down to here, 144. Let's see. I already did BA. We got John Deere. I don't really like trading this one, but I'll bring it up just in case. Now, let's see. Okay, bring it to the weekly. The 2 year. Yeah, see, John Deere is getting into some, support right in here, this 165 area. So bring it back to the daily. And it's it's uptrending, making higher lows, and it's like flattening out. So you kind of could say it's kind of putting together an ascending triangle on the hourly, and the stochastics are pointing up for the daily. So we'll see that if DEERE gets over like the 166, I would look for to get up to the 168, possibly even the 169 to 170 area for a reversal. Now, I would not expect a gap fill because it's just too far off. If anything, if it does pop, I think the max run is going to be like 172. It will get rejected off the gap resistance and probably come back and retest the 169, then go for the gap fill. So that's my speculation on John Deere. I mean, I don't really like John Deere that much. I just want to point it out for people that might want to play it, but I doubt I will play it. I've only played it a couple times, and I don't really care for John Deere, but it's worth mentioning. So the other one I have is Shack, which I've been talking about for the last couple weeks, because it's just right now it's just like it's in like a downward channel on the hourly. You can see like it's right here, it's going down, and as you can see on the daily, it's going down too. But let's see if I can bring it up on let me bring it up on this. Let's see if it shows this. Yeah, on the daily on Shack, even though it's going down, RSI is rising, MACD is rising, stochastic is rising. So I mean, it's showing a bullish divergence. But also on the weekly, it's got support right here in the 58 area, and I mean, it can go down to the 50, 56 at worst case scenario, maybe even down to the 54. I don't think there's that much more downside to Shack. I mean, I think that it's going to find, if it hasn't already, it's going to find support in the $57 range. So I would watch for Shack to reverse in the $57 range if it hasn't already found the bottom yet. Let's see what's next. Dollar Tree, which we've been watching that one. Now, Dollar Tree, as you can see, it's bottomed out. It's V'ing up. I mean, it could pull back and retest this moving average of $90. I mean, it's gone. Actually, it hasn't really gone that far, but sometimes it likes to come back and retest the breakout area. So, I mean, if it does pull back, it probably could pull back to 91.50. But I'll be looking over it, over this hourly candle high, which is like 92.70. So over 93. I would look for an entry to possibly 98. And once we get to 98, I think that it's going to pull back. So we look for a pop on this over 93 to 98 on Dollar Tree. The gap resistance. The weekly looks pretty good on Dollar Tree. And that's the one thing that I really liked about this. You get a bullish hammer on the weekly. You just zoom in a little more right here. And this is a good reversal candle. And look at stochastics is bottoming out. And every time that the stochastics bottoms out on the weekly, it likes to make a big pop. So we do have let me see. I don't have a yeah. Yeah, we have a long-term DLTR debit spread on this, so I think that once Dollar Tree gets over, I hope I haven't been saying Shack on this. I almost think I have been, but whatever. Dollar Tree. Once Dollar Tree bottoms out right here on the stochastics turning up, that I think that we're going to see this go back into the hundreds, into the triple digits again. So I really like Dollar Tree here. So like I said, over 93 to 98. And that would be the critical area, would be 98 on Dollar Tree. Now, next is McDonald's. I love trading this one, and am I still on the weekly? Yeah. As you can, while we're on the weekly, I mean, it's like right here, the last month plus, it's been chopping into this 198 to the 192 area for the last month. So I mean, it's gonna pop, and when it does, it's gonna be big. Let's see what it looks like in the daily. Yeah, see, it's gonna get like a little, like small little triangle right here, and I like it for going up. So I will definitely looking forward to this over even over 196 to 200. I mean, I think it's going to fill the gap. I just don't know what it will be this week, but I like McDonald's over 196, so I think it's ready. And the weekly chart, like I said, it's been chopping around for a month. When it chops around, consolidates, it's getting ready for a big move, and so that's why I love inside candles and consolidation. And the last one I have on the bullish side is HD Home Depot. I think this one could possibly be ready. On the hourly, you get an inverted head and shoulders right here. Left shoulder, head, right, possibly right shoulder. Now it gets over this, I'd say 215. Look for a gap fill at least on the hourly, and if it does fill a gap, I mean, it could go all the way to 220. So I'm not expecting huge moves, but I think that it's ready for the most part on the weekly. On Home Depot, it's found support right here. So and the stochastics is considered oversold on the weekly. So if there's a chance for it to turn around, it could be this week, or it could just go sideways and chop around before going up. So I would be very cautious about that scenario could possibly happen, because it's been chopping the last couple of days right here. But I think it's going to break out, especially if the market's strong. Home Depot will do really good. So I think the biggest plays this week for the bullish side will end up being McDonald's, Home Depot, and Dollar Tree as far as the big moves up if the market is favorable. Now, on the bearish side of things, I have, let's see, Target. Now, Target is, I don't know, to me, I think it's going to fill the gap. I mean, it's got like a little wedge going right here, descending wedge on the hourly and daily. It gets below this 124. I would look for it to retest the gap support at 122, and if it breaks that 122, it's going to fill the gap to 114. So we'll be watching Target for the downside. Let's see, we have Shop is next. I know a lot of people in the room have been trading Shop, and they've done really well. And right now, the hourly is showing a descending wedge, so it could pull back, even though it did, like on the hourly, retest the middle Celt, but it's an inside candle of an inside candle. It gets below 360. I think that, well, 360 on the daily, but if it gets below, let's see, 363, gets below that area, I think that it's gonna get down to 360, and if it gets below 360, you could possibly find support right into the 350 range. So yeah, I am anticipating a not a big pullback on Shop, but enough to let some air out, because it's had a couple big green candles and it's gonna let some air out. So I would expect a pullback to at least the 350 range. So I mean, ideally it would be 340, because that's where it broke out on the hourly right here, but I'm not quite sure if it will drop that much. But like I said, under 363 to 360 to the 350 area would be ideal, but 340 would be the best scenario for Shop. Next one is URI. Now URI, it's got a, even though it's making higher highs, it's got like a bearish divergence going on in the daily. So I mean, and plus when it gets over this 157 area, it likes to get rejected. So I'm looking for a small pullback under the 156.50 area to possibly go down and fill the gap into the 153 on the hourly. So that's what I'm looking for on URI. I mean, it can go down and continue this pattern, this like bullish funnel, and if that's the case, that it should rest right around the 147 area. So that'd be a 10-point fall if it plays out in that direction on URI. Now Apple is another one I'm watching. This thing is just going insane, and everyone is in FOMO, is like really just excited about Apple, and just FOMO is real on this. So I think that it's not gonna end well for those people. First of all, I mean, you get like a bearish divergence. I mean, it's high, higher high, and this is decreasing. So, and as you can see, it's like funneling. But I mean, the channel is like straight up. I mean, you get this side of the channel is straight up, and this side of the channel is straight up. And when you have a channel going straight up, it's not going to end well. I mean, look at it here. And this is not even nearly straight up like this one. I mean, this is not as dramatic. I mean, this is somewhat gradually between the top Keltner and the middle Kelt, and it's bouncing back and forth. And this is not even respecting the Kelt whatsoever. It's just going straight up. So I think it's going to pull back and retest this gap, support at the 267. So I'd watch Apple for a pullback this week. I mean, it will all be dependent on the market conditions. If anything happens with China trade or Trump or any other crap that's been happening in the market, so Apple will be very dependent on that. But yeah, I'm expecting a pullback to the 267 on Apple. I mean, it's not going to keep channeling straight up, and anyone that thinks that it's going to keep doing that is just not that bright. Let's see. Next one is Baba. Baba's the same thing. I mean, let me bring it up on my other chart so you can see it better. Let's see. Does it show it on this chart? Yeah. So you get higher high. RSI is lowering. Stochastics is lowering. So there's a divergence going on, as you can see right here on the hourly, same thing. It's uptrending, but MACD is going down, RSI is going down. So plus BABA doesn't like to stay over 200 on the weekly, so I'll show you right here. See, every time it gets over 200, it gets rejected hard. Reject, reject, reject. It doesn't get there. So I think that BABA will get pulled back. If it does do a pullback, I'm looking for, let's see, let's go back to the hourly. Obviously under 201 to, let's see, 199. We get gap right here. 197 to 196 to even then 194. So I mean, I think it's going to pull back. I think the ideal is to pull back to the daily moving average on the middle Celt, which will be 180, but that's pretty strong downside. If there's any news from China, anything negative, it could definitely see that 180 real fast. So BABA will be a one to watch for a pullback. Let's see what happens on that one. Now we have Spotify. Now I have Spotify on my bearish side, but you gotta be aware of what's going on both scenarios. I mean, it has an ascending wedge right here on the hourly, and it has a possible cup and handle. So I mean, if anything, if it can get over the 150, it could pop, and the cup and handle could play out. But if for some reason it doesn't, because you get a lot of resistance in here into the 148, 150 area. 150 is a big psychological number, and the last time it cleared 150, it pulled back. So that's the only reason I have it on my bearish side. But I mean, it could possibly, it's a good chance it could break out. The cup and handle could break out and could play out. So be cautious of that over 150. But if it doesn't get over 150 and still over 150, I mean, it could definitely pull back and come down here and retest the 136 support right here. So that's what I'm expecting. I mean, I probably won't pay too much attention to Spotify because of there's two possibilities that could play out. So I don't really like to watch things that have a strong case either way. I mean, if it was Roku, it's different, but Spotify, I don't know. I'm just making you aware that there's two possibilities. I'm seeing two different things, and it's hard to say which way it's going to go. So another one I have is AVGO. Now, AVGO, it's got like a head and shoulders on the daily. There's the left, there's the head, and there's possibly the right if it does fail right through here. And there's a lot of resistance in the 316 area on the hourly. So if it can't get over this, up in this area over 317, and it does get below 315, I think that it's going to pull back, and it could at least fill the gap to 311, to possibly even come down here to the 309 area on AVGO. So the semiconductors, if they're weak, which will be like NVIDIA. I don't have NVIDIA on my list, but I'll bring it up real quick. NVIDIA's chart should look pretty much the same. Oops, that is not NVIDIA. Yeah, see, NVIDIA is pretty much looking the same. You don't even have to play AVGO. You can play NVIDIA instead if you wanted to. But you get all these clusters of inside candles right here. And if it can't get over the 213 area and does get under the 211.50, I mean, it's going to fill the gap to 208 and possibly come down here to 207. Then if it does get below that, could looking for the 205 area. But AVGO, NVDA, the semiconductors will be depending on what happens in that sector, but they're prime for a move, and I'm looking for only interested if it moves south, so moves down. And the last one I have is Texas Instruments, and I was looking at that the other day. Now, let's see, what am I looking at here? Now you get like a funnel right here, bottoming out, but it broke up, but I think it's not going to fill the gap. I don't, for some reason, the chart says it's going to fill the gap, but I just don't believe that it's going to. My gut is telling me that it's going to fail. And the reason I think that is because, you know, you got, let's see if I can see it on the other chart. Is it this chart that I saw it on? Yeah, see right here. No, where was it? Where did I see it? Oh, right here. See, on the Texas Instruments, the hourly, I don't have the MACD or the other stuff. See, the MACD is showing a slight bearish divergence on the RSI and the MACD, so that's why I'm leaning towards that. I don't think it's going to fill the gap, and that it's got all these inside candles up here. I think if anything, it's going to come back down here and fill the gap to below 120, and possibly even fill the gap down here at 118 before going up. So usually if it's up here and broken out of this little 122 area, out of this little channel above gap resistance, that there's a high probability it's going to fill the gap. But something is telling me I don't think it's gonna. I think it's going to pull back. So because of the divergence, and I don't really like to trade TXN that much because it doesn't really move too much in my opinion. So I will watch it, but I doubt that I will play it. We'll have to see what happens. But you know, sometimes, you know, when it does fail, it's going to drop hard, because I mean, look when it does pull back. It pulls back pretty good. So, and I just think it's getting ready to pull back. That's just my opinion on TXN, and I believe that is it. Yeah, that is it for the watch list. It's not too bad, but it should be a good week. There's a lot of good potential setups that could possibly play out and happen. So if you're not in the room, make sure that you are. If you're not a sub, I would. You don't want to miss one of these big plays. I think that we're going to have a couple of really big plays this week. So, and that is it. Thank you.